Hi everyone, it's Jack about another video, and today I'm going to be talking about Meta Platform stock, which just less than an hour ago released its fourth quarter earnings. Stock is up 18% after hours, probably going to put it to about $180. Stock is currently at 153, that's down 53% in the last 52 weeks. However, its 52-week low of 88, that's still been almost 100% gain from the 52-week low. So you can say for some people this has been a horrible stock to hold. Some people there's actually been a lot of opportunity here and potential for a near 100% return in 6 months or so. Currently trading at a trailing P of 14. We'll look into the earnings. This is about to shoot up. Market cap of $400 billion, the lowest it's been for some time, since about 2016 sort of numbers. I'm going to dig into the earnings a bit, dig into some of the headlines around this business, then tell you what I think of this business going forward. Like and subscribe and enjoy the content, and let's get into it. Immediately after the Q4 results were printed, this seems to be all that anyone is focusing on, these sort of headlines. Meta loses $30.7 billion on Reality Labs. That is not really focusing on the underlying business. The underlying business is what is making the stock go up 20%, and because it has had reasonably good performance, as I'm going to talk about in a minute. However, this cannot be got around. The Reality Labs business unit is absolutely eating cash for little to no return in the short term at the very least. Only the very most optimistic people would think there's going to be some return in the medium term. I think there's a real cash sink for this company, and it doesn't seem to be changing anywhere in the near future. With that being said, let's look at a relatively high level summary of the Q4 and full year financial highlights. If I had to summarise this in a sentence, it'd be everything's down apart from costs. This is kind of indicating to me that Meta, even though advertising is in a cyclical business and we're in a current downturn at the minute, so obviously advertising take rates are dropping, it has to be said that Meta is looking like a post-growth business in its current form. User numbers are not going up a terrible amount, and revenue is actually contracting by 1% year over year. Now, while 1% isn't the end of the world, contracting year over year, this is from previously growth rates of 20, 30, 40% year over year, and that is just not good enough. Growth has essentially evaporated, and it's starting to look that this business is more in a post-growth life cycle right now. Income from operations is down, margin down, operating margin now only 20% when a year ago it was 37%, for the full year 25%, but still not great. Everything down across the board. Net income down 55% for the quarter, 41% year over year. None of these results are good enough. Looking at the segment results, advertising is still an incredibly strong business, still with excellent operating margins. $31 billion of sales, or just over, in Q4. This is the best result of the year so far. However, Q4 is typically the strongest quarter, so the only real fair comparison is to go for Q4 2021, where revenue is down a decent amount. Reality Labs revenue, which is more what I want to start looking at, $2 billion for the year or so, $727 million for the quarter. So even that is down quite significantly compared to Q4 2021. $2 billion for the year on 14 or so billion in sales. Pathetic, really. And the continued focus of this Mark Zuckerberg on this business segment is starting to get a little embarrassing, in my opinion, because I think it would take an absolute miracle for this to get anywhere near the family of apps revenue, which is the cornerstone of this business. In my opinion, Meta Platform should go back to focusing on what made it good in the first place, which is advertising business, which has no shortage of competitors, in my opinion. While it is the strongest in the field, has no shortage of competitors, with TikTok being one of them. They're growing like a weed at the minute. So I do believe they should go back to focusing on this. You can just see it from the operating income side of things. Majority of operating income from the business is from the advertising segment. Reality Labs, nearly $4.3 billion loss compared to 10.6, nearly 10.7 billion of operating income from the family of apps. It's no contest, really. Reality Labs has been such a drag on the operating margins and the operating profits that I think Meta really needs to wake up, because they're sleepwalking into a disaster, in my opinion. Just to illustrate the scale of decline in the net income, you can see Q4 2020, 11.2 billion, Q4 2021, 10.2 billion, and Q4 2022, 4.65 billion. That is really terrible. These sort of graphs are for really declining companies, and Meta, in my opinion, isn't one. It still has loads of potential, but this type of trend is obviously not what you want to see. An absolutely precipitous decline this year as the Reality Labs spending has ramped up, and is really unacceptable from a shareholder point of view. CapEx for the full year this year came in at $32 billion. That's up almost 100% on 2021's numbers, which even then were very high for this business. For what is really a relatively capital-light business, traditionally has very good operating margins of over 40%, and This is absolutely unacceptable in my opinion, and it just shows they are really doubling down on what I think is a losing strategy in the Reality Labs segment. Moving away from Reality Labs and talking about what the business should really be focusing on, that's the family of apps. Family daily active people have never experienced a quarter-over-quarter decline, despite what many think about the competition, as I've just mentioned. 2.96 billion daily active people across the family of apps, which is absolutely outstanding. Never declined. The business continues to just chug along. Over 3.6 billion monthly active people. The core business here still looks reasonably strong, even if the advertising revenues are in a cyclical decline. One of the biggest illustrations for me of this company moving away from its growth phase, kind of getting towards a value phase, is that its price earnings has just steadily declined from 2017 to the present day. And that is basically because people are just not willing to pay the sort of premium that was placed on this stock when it was growing 20, 30, 40% a year. Its price earnings growth ratio is looking at around 3 at the minute, which I would say is objectively not that cheap at all, when previously in 2021, 2020, 19 and 18 and 17 it was around 1 or under, which I would consider to be cheap, and in some cases in 2018 bargain territory. Price to book has came down over time, but not really that important when we're talking about a business like Facebook. While price to cash flow looks very, very cheap, they're just absolutely burning through money in their capex, and I don't think this is an investable business, while the Reality Lab segment is chewing as much cash as it has. That price earnings growth really illustrates that this company has no real earnings growth on the horizon, and it is more of like a value business right now. If I was Facebook personally, if I was the CEO in charge, I would drop the Reality Labs ventures. I would focus on the core business, and crucially, I would kind of just lean into the fact that I'm a value business and start paying a dividend, start buying back shares. They create a ton of excess cash. They have excellent cash flows when the business is run properly, and I believe this is firmly the strategy. Ultimately, I don't think that's going to happen through either Mark Zuckerberg's vanity or his genuine belief that the metaverse will be the next phase of the internet, or the next big technological advancement. He's going to continue to pour money into Reality Labs while he's CEO. The name change shows you enough his passion for this and his belief that this is the next phase for this business. And in my belief, it's just not there. Whether in 5 or 10 years it is, who knows? 15 billion a year for that. The growth rate will be incredible, don't get me wrong, from 2 billion to that. I just don't see the interest. Of course, maybe it's like the iPhone where, no one wanted the iPhone until someone put an iPhone in their hands and they were amazed. I just don't think that's the world we live in anymore. I don't think the interest for the metaverse is there. I think it was kind of a fad in 2022. Maybe the interest develops in 2030, but I just don't think the technology is there. Yes, companies have to develop this technology. I just don't think Meta is the company to do this. I don't think wasting, in my opinion, $10 to $15 billion a year is the right way to go about it. Personally, I like to see this company doubling down on the family of apps, paying a dividend, share repurchases, and just accepting that it's out of its growth phase, accepting 5 to 10% growth a year, which it's well capable of, accepting some price increases rather than growing incredibly, because everyone uses these family of apps. You can't grow much more when you have 3 billion people using you every day. I think it should accept this. I think it should pivot into it. And I think then it could become an investable business again. Of course, this is just my opinion. You should let me know what you think. I'm not a financial advisor, so don't take any of this financial advice. Do your own research and due diligence. Let me know what you think in the comments below. I'll see you again next time.